So we got a slight, I would say like a slight weak open. So the market's opening down about 0.2%, so nothing really crazy. We had the day obviously, of ramps, and I'm thinking red to green on the market today. We're down about three, very, very little, about 35 cents on the TQQ. The TQQ is our go-to when the market gets wild. Why? It's a 3x ETF for the NASDAQ. In general, when the market gets oversold like it was, and yesterday was, right, the bounce of bounce. From what I read, it was the biggest one-day move in the Dow of 1,200 points in history. Not in percentage terms, but just in terms of points. Great day to trade, right? Great day to trade. We were talking about this yesterday. You got to step on the gas when that happens. You got to step on the gas. All day in chat room. What were we talking about? Be aggressive. Step on the gas. Step on the gas when you see it, because like these kind of ramps are just coming up. So TQQ's, of course, our main watch. We're getting a small gap down in it today. And I'm thinking that we probably go red to green. There's a couple things to be mindful of. There's going to be a liquidity push from central banks all over the place in the coming days, as people are meeting for their interest rate decisions and stuff like that. I think ours is next week, but you've got them all over Europe and stuff. So the powers that be are going to try to put that pump on, and the pump is coming. The pump will be coming. We are, historically very oversold. So the T2108 indicator, which is something we use to measure market breadth, percentage of stocks above 40-day. Historically, anytime, so we got down to low as 5. Historically, anytime you get under 10, you can get some serious market ramps. If you see over here in the past, in January, we got down to the 3s. We went on a monster run. And if you go back like all these years, like in time, like the biggest market ramps, the biggest trends in the market, they all come from a historically, like once a year, once every 2 years, extreme oversold level in market breadth. Market breadth is more important than just looking at like advanced versus decline, or even oversold in terms of a general market index, because market breadth tells you what's happening underneath the hood of the market, the percentage of total stocks that are oversold or overbought. So we're still at now, whether the market itself goes and does like a V-shaped bounce. What I mean by V-shaped bounce is like, you come crashing down and you V-shape right back into highs. Whether you come and do just like a V-shaped bounce, or whether it requires a little bit more grinding, we don't know yet. But we've got some two big candles here. I'm thinking the real careful and see like how the market starts to react around those levels. Is very, very tricky to go scan through all the stocks. So you want to add additional filters to it so that you can narrow down 790, because usually it'll have like 100 names. But when the market's up so much, there's going to be a lot of names. You want to add some additional filters to it, price, volume, catalysts, overall patterns, things like that you can narrow it down. And TC1000 is very easy too. You can just, when you click, you can start to add additional conditions, and that'll help you narrow it down. And I think we got a good list for today, though. There's going to be a lot of good second day plays, and I wouldn't say there's a lot of gappers today, but there's a couple that I like. So we got Tesla here. First of all, Tesla was a rubber band long, so broke below the lower Bollinger Band, oversold stochastics right off the 50. I saw a couple of you guys load this thing, into this zone, which is awesome. That's what you want to do. You want to try to hit these things as close to support as possible. Let the chasers come in and buy them on the remounts of moving averages and stuff, but it's already, by that time you miss out on the meat of the move. It's not as fun, so you want to always try to get these things. Now on the day trading side, I think we're going to be able to trade this thing as it sucks back into the zone between 800 to 950, and probably from there it'll meander around. But I do think we've got a little bit of a suction that we can play there for the next few days. So keep this on your list. Now Tesla was big yesterday. It was pretty much following the NASDAQ. You had, if you look here, it did the exact same move with the NASDAQ. You came back to 20 EMA, ramp, pulled back to the VWAP, ramp. It was up 11% yesterday. Now the gap takes a little bit more steam out of it. Tesla is a stock, you'll see at 8%. Tesla's a stock you always want to hit on dips. You never want to hit this thing and try to buy it high. As soon as it comes back into your EMAs and holds, that's like when it's a go. I've seen this a million times on this stock. Like, you don't want to buy breakouts on Tesla. There's too many algos in it now. And the market cap's just getting to that point where, it's HFT, algo city on this thing. So you want to always be hitting this on dips. I think it's going to be in play. SC's got earnings out today. You got an old high of 52 before the coronavirus stuff hit. You got earnings out. Post wider than expected Q4 loss. Revenue misses. So you know what? This thing may hold. It may not hold. We don't necessarily know. The best earnings plays. Hey, Hellas, how are you? The best earnings plays are always from what? They beat expectations. They beat revenues. You got 50%, 100% earnings growth. Those are typically like the best ones. The only time you see like stocks ramp when they miss earnings is like with like biotechs, as biotechs don't really ever have earnings, so it doesn't really matter. So I'm a little curious on how this one reacts because, first of all, it's not that hot of a trader. If you look at the normal ATR on it, it really is not that big. We traded it, in the past, and it didn't give us like that much intraday juice on it. So I would give that like a B- right now in terms of, how I'm thinking about this. You do have, it's a little bit thicker of a float. They don't even have the short interest over here. So I think that's, 50-50. Now, LVGO is interesting. LVGO, the old high here is 28.49. If it breaks over that, we're going to ramp this thing right back into 30 spot. This is a recent IPO. Recent IPOs that have earnings out make exaggerated moves to the upside and downside. When you have a new issue, it's not covered as well. You don't have as much like analysts, revisions, and you don't have anybody really covering it. It's only a $2 billion company. So when the earnings come out, like these things can ramp hard because it's just a new issue. So this is something to kind of keep an eye on. I think that one's going to have some juice on it. And then, this TRY got dusted on earnings. If it breaks under 1330, which is the low from the couple days ago, I think we put this one on watch for a potential short. I won't short this at lows because the SSR is going to be on it. But if it pops up and fizzles out, I think we'll have a chance on this one. What do you guys think of this one? Good. Prognish, what are you watching? Sweet. Let's talk about just some of my faves for today. Billy had a nice remount of its MAs. It's really starting to tighten up here. Was up about 6% yesterday, which is not a huge day considering, how much the market was up. But the pattern here is really good. If it breaks out of this trend line, I think that this one ramps, back into the 30s. I would normally even look at a stock like this as a potential swing trade, but it is a China name, and with all that's going on, I really don't feel like, adding any swings for China names, but it does look pretty good. This Tau, this 60 breakout is imminent on this thing. You can just tell from even the volume pattern and the way it trades. Like, I think that this one's got a shot at 60. This is really top of the list over the next coming days. And you know what? It's frankly just a smooth trader. When you look at a stock, like what you want to really do, like you want to see, like, does it react and move to the things that we use, right? Like EMAs, VWAPs. Does it do that? I think that's going to be really important. Space is still in play. The 9 EMA here is key. It got faded off a little bit yesterday at it. You see right at the resistance spot. And then it just tumbled down all day. But if it can kind of come back and remount this 9, I think that takes us right into this 30 spot. And then we'll get this thing going. Next, ENPH. This is one of my faves. This is a swing trade look also. You got breakout from earnings, pull back to 20, remount to the 9. That's a classic Momo swing trade setup. When you close over the 9 EMA, it's ready for a swing trade, but also this is going to be just a good day trader. The range on this is pretty good, and frankly, it's just got nice liquidity and stuff. It's not one of those tickers that gives you a lot of shakeouts. A lot of times, like, we're trading some wilder tickers, You get shakeouts and things like dip and rip, but this is like a smoother trader. It's right in that sweet spot of market cap too. You know, those kind of $3 to $10 billion market cap stocks. They seem to be our sweet spot lately. I think this one looks pretty good. TVIX is opening up slightly green. I'm watching this one for the green to red today. I'm watching this one for the green to red. So if this gap gets faded off, I'll look at potentially taking a short on this one. It's been a good trader for us. You know, essentially what TVIX does is when the market goes up, this goes down, and then when the market goes down, this goes up. It's got really some incredible range on it. The play on this one is green to red. If this gap gets faded off, we go green to red on this, meaning we're going to short it like as it breaks below yesterday's close, and then we'll take this thing maybe down to the 9 EMA. There was like some contango issues on this yesterday, so it wasn't mimicking the VIX for the CBO VIX in an easy orderly manner. Like the CBO VIX was down 16%, and TVIX was only down 7%. TVIX should actually be multiples of the VIX. So it should have been down like 35-40% yesterday and bled out, but it didn't. So there's something about, I was reading something about some contango or whatever. That's just the way it goes. IOVA. Hey, Dawson, we do classes every Sunday, Tuesday, Wednesday, Thursday, Sunday. So if you're not following along properly, because this is not, right, this is just us getting ready to trade. If you're not able to follow along properly, I'll get you some kind of beginner stuff. You need to get the lingo. If you come into our chat room, we have like 20 on-demand, like modular videos that get you all started. This IOVE looks pretty good over here. You got 34. Had a nice breakout yesterday. I was staying away from it because it had like buyout news, so I'm kind of 50-50 on this one. But the chart is really hot on this. I'd keep this on watch for a second day play. On a second day play, though, you don't want to chase it up after it goes up like this. Let this thing pull back. If it goes red to green, then take it higher. Yeah, you see this market starting to go red to green right here. We're going to have some nice action on this. You know what? Let me take a look at Apple. The issue on Apple is going to be like it's right coming into these MAs. I think that's going to be really, really important, when we do this. Yeah, I think if you got it if you had it down a couple days ago, or even at the open yesterday, you're good to go. Otherwise, no. I think Lulu is a nice one, too, for a potential swing. You got, this big pullback over here. It's about 30, 40. That's about 60 points. You got actually some room to go on this bad boy. Definitely want to keep that on watch. And even, this Carnival Cruise Line, if this thing starts to bust out of this kind of wedge over here, this one should have a rubber band play in it. You got a nice level here, kind of at that 33.50 spot, 34. If it kind of breaks out of this base, you're gonna have yourself a nice move, maybe into the 36, 37 range. You've got a gap fill here. The issue on this one is gonna be as long as there's virus news coming around, it's getting decimated. But in the end, when that ebbs, this one is gonna probably ramp back really hard. Maybe not into the 50s, but you get this thing probably back into that gap fill. Same thing with RCL. Yeah, you got about $10 worth of upside on this one. That one looks pretty good. Yeah, I like this one too. If you look at like a kind of 30-minute chart here, 15-minute, 30-minute, you'll get a clear picture of what's happening. So you got a nice range over here. Hey Dawson, and you can just email me. I'll help you out with any questions you got. Yeah, you got about $10 of upside on this one. These things are all getting hit because of the coronavirus. This Royal Caribbean is frankly probably a little bit better than, you got a little bit more upside than CCL, and the float's lower on it. And frankly, if anybody's ever been a Carnival Cruise Line, it's no good. It's no good. It's no good. But Royal Caribbean Cruise Line, that's nice, right? If somebody invites you on a Royal Caribbean Cruise Line, you're feeling pretty majestic. You're like, man, I'm going on the Royal Caribbean. You're feeling like that's like something you can post on your Facebook, right? But you go on a Carnival Cruise Line, you just know it's going to be filled with heathens and just a bunch of riffraff, right? It's called Carnival. So no go to Carnival. I like the RCL. It's got more room to go. The gap fill is at 101. And then you got yeah, you got room to 101 to 106. Man, you got a lot of room on this. So first target, if it breaks, is probably in the 90 spot, and then if it actually continued to hold, you probably get this gap fill over here. Aha, Kenny, what's up, man? That's pretty funny. Alessandro, how are you? So these are like two longer term plays that I'm just looking at. They haven't triggered yet, but it is something that if the market starts to stay hot, I do think that these will be picked up, and they've got, frankly, a lot of room to go to get into these gaps. This is going to be pretty good. Yeah. Hey, guys, a couple things to remember. I've got a webinar tonight on how we've been trading this market with the coronavirus. We've had probably a couple just magical 2 weeks of trading, both to the short side and long side. There's so many plays and opportunities between coronavirus stocks, ETFs, volatility. I'm going to go in detail kind of the next time the market gets like this, what the heck do you do, right? What the heck do you do? How do you profit from it? I think it's at 8 p.m. We got links on all that kind of stuff too. Hey, Bonsi, what's up? Going. So keep all those, keep both of these on your list. I think that's going to be really the hot spot. Now, in terms of another swing setup here, this setting is a breakout. See, you got the breakout over here. So when you break out you got breakout 113, you ran a 145, so 30 points. You had a really nice orderly pullback. See how like you just low volume, orderly pullback into support into 20 SMA. Yesterday you remounted the 9, really important. This is like a classic swing trade setup. You've got a nice, I think this one's got more upside to it. We probably get this thing back into the 145s, and then we're going to be good to go. You can see here, so you got a double bottom at 118, starting to take out this range. You see 145 really quickly. Now the swing entry's done on this. You can't enter it here because it's gapping up today. Yesterday would have been the spot for a swing entry on it. Now it's just a straight day trading vehicle. When you think about the difference between swing trades and day trades and how you enter them, a stock that is going up, say 3, 4, 5, 6 days in a row, you can keep day trading it. But when you're swing trading, meaning you're going to hold the stock for like a week or two, you have to get it either the first day or the second day max of the move. If you're buying on day 3, then you're too late. You're literally, you're the last man to the gangbang at that point, which is fun, which can be fun, but it is not ideal, right? Number 2, maybe even number 3, you could do it. But if you're last, man, that's gonna be you're swimming in all sorts of nasty. You get stuck cleaning up, you swimming in the nasty. You don't even want to go there. So don't buy on day 3s. Not for swing. You can on day trades. This looks pretty good too. Not as much. You got a remount over here. actually moves pretty well, up 5% yesterday. I would keep that on. I would keep that on your watch list. For me, I hate trading home builders. The homies stink to trade. You know, if you look at like XHB, which is like the home builder ETF, when it goes, like it just kind of grinds higher. I mean, it'll go, but like it'll take you 15 days and 10%. The homies are just like that. But on a longer term basis, you know, the home builder market, remounting this 200 SMA, it's probably got some meat on it. You know, there's a 3X ETF for home builders, which is Nail. It just doesn't do any volume. You got see like these spaces in the charts. It literally means there's like no trading taking place over there. So just something to kind of be mindful of, guys. There is Netflix is a swing setup also. Let's just kind of rewind the tape here. These 4 gappers here are going to be our focus list, and then on the non-gapper side, right? We want a space, E and PH. Our faves along with TVIX and TQQ. TQQ and TVIX. So keep those like main 6 on the list. Those are going to be our faves. Everything else is just window dressing. Trade well today. Trade good, trade fast. Do what you got to do. And just be like super mindful of, you know, the locations on everything. You don't want to get too caught up in chasing the market. If the market pushes hard at the open, let it pull back, and I think we'll be good. Nvidia's on my list too. Good. You know what? Sedig was a main focus of mine, but it is gapping up like $8 now. So it's not even gapping up on earnings, so not really my favorite cup of tea. I think Disney's got some upside to it to maybe about 127, 130. If it can hold here, this is a rubber band setup here. You know, you went from 140 to 113. This to me looks like it's got more upside on it. It's a shitty day trader, but it can be a multi-day trade, like a swinger. Good, 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 good. All right, man. Let's go do what we do. Let's have some fun. Let's be good. Let's be great. Let's be fast. And guys, as always, I see you in the webinar. There's a lot to learn. It'll probably be about 2 hours long, but you're going to want to be there. Let's go do what we do. All right.